Let's see. Okay, here I am. Sorry about that. I think that we were having some audio difficulties. So I'm going to go ahead and start over here from the beginning just to let you know. I'm J.R. Cox. I'm a real estate agent with Vangie Signature Realty. Today is the first of many live broadcasts on Google that you can also see on my website and on YouTube. Today we're going to do a home buyer Q&A where people will ask questions and I'll address those as we go along. Also, some things that I do is every once in a while I'll put out a video that has some featured listings, random listings in the area all around Lake County. And then also, as I find properties that are really good values that I look like are going to go off the market really quickly, I'll let you all know about those. Kind of keep an eye out. So if you're ready to make a buying decision, then it'll be there set for you to go, okay? So what we'll do here is I've had my lovely wife input a few questions from the beginning to get us started, and I'll take a look at those and we will see if any new questions come in. If you are not on Google Hangouts and you're not able to input a question and you're watching either on YouTube or on my website, you can go, you can text me the question. My number is 352-409-4741, and just send me a text there. I'll see if it comes through. Then I'll see if I can get to it in the answer session. Okay, so I'll start off with a couple here. And the first one I'm going to answer is how many houses should I see before buying a house? Now, it depends, I'll tell you that. On average, the buyers that I work with, the ones that do make a buying decision, they view 5 houses before they find the one that is the right one for them to go ahead and make an offer on and move ahead with owning. And if you look at more than 10, it really starts to get, you know, like you lose hope, like you're never going to find the right one. So the best way to do it is get with a good realtor who can really narrow down what you're looking for and eliminate those that aren't going to match your wants or your needs, and also those that won't match the type of financing that you have. It's possible that you'll have a, you know, like a USDA financing situation, and not all homes will qualify for that. And it's for good reason. It's because sometimes they need some extra attention as far as repairs and things like that, and they're not really smart to get into if you don't have the extra cash to cover that. Okay? So really, it's up in the air as to how many you're going to look at, but on average, the buyers that I represent look at 5 homes before they find the one that they end up ultimately owning. Okay, here's another one. How much below asking price is a good offer? Asking price, well, offering below asking price isn't necessarily something that you always want to do. If a home is priced at the correct market value, then it is likely going to, in this market, in this day, it's likely going to garner multiple offers. So if you're kind of the mindset that it's still 2013, 2012, and you can get really great deals on all these houses and offer a lot less than what it's listed at, we're past that. We're past that time. There are still a few houses out there that you're able to do that on, but for the most part, you're gonna be paying close to the list price. The homes in this area, on average, are selling for about 98% of the list price, and some are above, some are below that. So on average, 98% of the list price. So really, what you want to do when you are considering making an offer is getting with your agent, determining what the true market value is of the home, and making an offer based on that, as well as if they can see if there's any other offers in place, or if it looks like there's a lot of activity on that house, then you might want to consider making a full price offer, and sometimes even above that. Okay? So a good offer, to answer the good offer is an offer that the seller is going to accept. That's better than other offers that may come in. And having a good agent will help you determine that. Okay, here's one about financing. What loan is the best? The best loan is going to be the one that works for you, for your purposes, and for your current financial situation. There are several different types of loans. FHA loans are loans where you do put a little bit of money down. Typically, it's 3.5% of the purchase price. And there are fees associated with getting that loan, just like with any other loan. USDA loan is very popular in Lake County. It is a rural loan, hence the USDA part of it, and it's a 100% finance loan, so there's no money down, but there are closing costs, which are something that you can sometimes ask for the seller to contribute part of their money toward your closing costs. But you want to be careful with that. You want to make sure that your offer kind of makes up for that extra money that you're asking for the seller to do. So just for example, if the list price is $135,000 and the market value of the house is $135,000 based on what your realtor has shown you, and you're wanting to get help with closing costs, then you'll want to consider how much money are you asking for in closing costs, and where is that going to put the overall net profit for the seller based on their closing costs, based on their selling price, and the closing costs assistance that they're going to give you. Okay, and your agent will walk you through that. There are also conventional loans, which is you can put down 5%, 10%, 20%. You can put down as much as you want above 5% on a conventional loan. The more money you put down, of course, the lower your payment will be, and you can often avoid paying private mortgage insurance if your loan to value is lower. Okay. Now, the different loans, there's also a VA loan, which is meant just for veterans, and it's also a 100% financing situation. But the fees are a little bit higher on that. So you may want to consider a USDA loan if you're looking at a VA loan also. What it really comes down to is what loan can you qualify for. So you need to speak with your lender, and I've got some lenders that I can refer you to. And they'll be able to help you out based on your credit score and your income, how much money you have to put down, things like that. That'll help you best understand what loan program is the best. Okay. All right. Let's see. Here we have. Should I use an agent or just call about the houses that I want to see? So that question is basically, you're looking on Zillow or on the MLS. Realtor.com, one of those places, and you see a house that you like and you just find out who the listing agent is and you call them. That's fine to do. What I would suggest is that if you are serious about finding a house and you want true representation, you need to find a good realtor who you can trust, maybe who a friend has referred, or you find one online that has good reviews, that looks like they'll be good teacher for you. And so when you have an agent who's representing you, that gives you that that extra support that you need, especially if you're a first-time home buyer and you're not really sure how everything works. When you use a realtor to represent you, it doesn't cost you any money to use them in the search of a home and in the negotiating while you're under contract or getting into a contract, them helping you figure out what the market value is of a certain home. And also, talking about some of the loan programs and how to structure offers, things like that. Those are all free to you in that process. Now, typically, an agent will charge a transaction fee or an administrative fee at closing. It could be a couple of $100s, but that doesn't happen until the closing table. So all that work that the realtor does for you in the beginning is all free to you, and it's really beneficial for you to have somebody who's on your side, who's helping you weed out homes before wasting your time driving around and going to look at them, and then also helping you in structuring offers and negotiating offers, really understanding what true market value is on houses and things like that. Okay. Let's see. How long does it take to buy a house? Well, that's going to depend on a couple of factors. If you're just talking about from when you make an offer or when you have an accepted offer until closing, then that could take anywhere, if you're paying cash, it could be 10 days, as quick as the title company can do the work and as quick as the seller wants to move out. I would say 10 days is a good time period for that. But on average, or not on average, most of the time, it's going to be 30 to 45 days, depending on the type of loan that you're going to get. USDA loans, FHA loans, VA loans, they're all going to be about 45 days, and maybe even longer with some changes that are about to take place with the Consumer Protection Board just put out a new law that's going to be going into place sometime real soon that requires some changes that may delay the real estate transaction process, and it might push some of those to 60 days. So if you're looking to move before the end of the year, you need to start looking now at homes, getting pre-qualified with a lender, meeting with an agent to determine what's available in your price range and how quickly those are coming onto the market and then leaving the market, going under contract. And that'll help you determine, when you need to start looking, if you're looking at a 45 to 60-day close. Conventional loans, 30 days is the normal now, but that may get pushed to 45 days. So just keep that in mind. Once you go under contract, then it takes at least 30 days with most transactions. Okay. Got another one here. Do the owners always pay my closing costs? With an offer, and when you work out, like I talked about earlier, with your agent, when you're structuring an offer, make sure that the net proceeds for the seller is going to be beneficial to them based on what you ask for in that offer. So if you ask for closing cost assistance, you may want to increase the purchase price. And if you're not asking for closing cost assistance, then your purchase price could come down. And the way that you want to look at that is if you have cash in pocket and you're okay with paying your own closing costs, then you can offer a lower purchase price. That way you're not going to be borrowing as much money, and then you'll be paying less interest over the term of the loan. But if you don't have much money in pocket, and that's very important to you to keep as much cash in your pocket as you can, then it's important to ask the seller to contribute to your closing costs. Typically, closing costs are going to be about 4%, 4.5% of the purchase price on most loan programs. So keep that in mind when you're structuring the offer, and understand that when the seller's looking at that, they're not just looking at the purchase price, they're also looking at that amount of money. So if you're at a $100,000 purchase price, 4.5% is $4,500 that the seller is saying, here, I'll give you towards your closing costs. But remember that really you're trying to buy my house at $100,000, but you're paying, under $96,000. So I just keep that in mind as you're going through. Okay. Another question here. Is price always the most important to a seller? That kind of goes along with what I was just talking about when you're looking at purchase price and closing cost assistance, but also what you want to look at is the time frame, because sometimes a seller needs to get out of the house. They may have an offer in on another house that they're needing to move to. They may have a job change that they're needing to just go ahead and get the house off the market, and you may be able to get a better deal on that if you're able to find out that information. And if you have a good agent, they can talk to the listing agent and kind of feel them around to see what might be the most important thing to the seller. Maybe they need to wait and they need to close in 90 days as opposed to 45 days. And if you have that flexibility and you're able to save money on the purchase price and wait that extra month and a half, then that could work out for you as well. So those types of things you need to keep in mind. And a good realtor is going to help you determine if that's the way to go or not. Otherwise, you may just need to have the best price. It just depends. Okay. Let me check over here and see if any email questions have come in here. Okay. Is it a good idea to buy a foreclosure? A foreclosure can be basically the same as a normal house where somebody's living at it, and sometimes a foreclosure can be a much better thing to buy than a normal house. Foreclosure doesn't necessarily mean that the house is in disrepair or that there are liens on the property that could cause an issue, or that you have any extra hurdles to jump or anything like that. Foreclosure can typically close in 30 to 45 days, just like a normal loan. And sometimes you can get a good deal as far as a lower purchase price than what the true value is if the home needs repair, because not a lot of people are willing to put in that type of work. They're looking for a move-in ready house, and if you're able to go in and do that work and you're able to get the funds to buy that type of home, then yes, it can be a great idea if that's what you're looking to do. But I would suggest if you have a young family and you aren't really interested in making repairs and you find a house that's like that, you may want to forego it and find one that's a little move-in ready, which it can still be a foreclosure and be move-in ready, because a lot of times the foreclosure companies will come in and put in new carpet and paint and appliances, and it looks like a brand new house. But typically those will disappear from the market pretty quickly, so you need to have somebody who's working for you and is on top of things to get to it. Okay, let's see. If I make an offer too quickly after seeing a house, will it make it so I seem too excited and end up paying too much for the house? In this market's current climate, making an offer too quickly, as far as if a house just came on the market and you make an offer the first day, like you're the first person to go see it and you make an offer on it that first day, if it's the right house for you, that is the time to make the offer. Don't wait just because you want to see, what happens over the next few days or something like that. Because I know I've had 2 listings recently. One sold before it was even really on the market. It was just on Zillow in the coming soon stage, and we had somebody come in and look at it before it was actually listed on the MLS, and the seller accepted their offer based on that. So you didn't even get a chance to see it really. And then I had another one that had 3 showings on the first day and was under contract the second day. So if it's the right house, the right time to make an offer is right then. Don't hesitate. If you feel like it's the one, then go for it. Otherwise, you may miss out on it. But certainly don't let your realtor kind of force you into making an offer in order to not lose the house. But do know that homes in this market right now are leaving the market rather quickly, especially when they're priced right and they're presented properly. Will it make you seem too excited and end up paying too much? Don't pay too much for it. Have your realtor make sure they tell you what the true market value is, and go for it at that point. It's certainly understandable if because this market is on a steady increase in values, it's okay sometimes to pay the list price or above list price. For one thing, your lender is going to require an appraisal, and the appraiser will come in, and if it doesn't appraise, so if the appraisal comes in and he says that the house is worth 145 and your offer is for 150, you can make the determination to put in that extra cash in order to be able to buy it. Or you can just say, Mr. and Mrs. Seller, this appraisal is for 145. I don't want to pay 150. And you ask them to lower the price to 145 and see what happens from that point. So I would suggest not paying too much, using an agent who is understanding of where the market is kind of headed, even though nobody can really see what's going to happen too far off into the future, but they can kind of give you an idea of what's been going on and use common sense to see which way it's headed. Okay. Is it a good idea to buy a short sale? A short sale can be a great way to get a good deal on a house. The way a short sale works is a short sale means that the bank that has the mortgage on the house is willing to take short of what they're owed. So let's say somebody bought the house in 2006 at an inflated price because of the way the market was then, and now the home is not worth as much as they still owe on it. The bank is saying, okay, we understand you're going through a hard time, we'll take less money than what we're owed. So what happens with that, it's a longer process typically, where you put an offer in with the seller and the seller has to accept your offer, and then that offer goes on to the bank that owns the mortgage, and they have to determine whether or not the seller is truly going through a hardship, if the purchase price that you have offered is reasonable for what they're willing to take based on what they're currently owed. And sometimes this can take several months. Typically with a short sale, the contract calls for 90 days from the time that you and the seller come to an agreement to the time when the bank is supposed to give you an answer. Either that's a counteroffer on the purchase price or some terms of the agreement, or it's or they accept it, or they just reject it outright. And just because there is a 90-day deadline on that doesn't mean that you're going to have an answer in that 90 days. So just keep that in mind, that when you are looking at short sales, you need to have an open-ended time frame as far as moving out of your current residence. If you are trying to sell your own house and something needs to be contingent on your house selling and that house being purchased, a short sale may not be the right thing for you. Or if you are moving to the area, you need to find somewhere pretty quickly, a short sale isn't the right thing for you. Sometimes short sales will be listed as having a bank approved price, and what that means is that they've gone through most of the process, and you can have the opportunity to close a little quicker on the short sale, but there's still some things that can be up in the air that might lead to delays and things like that. So it is a good way to get a good deal on a house, but also you normally have to wait a good while, and it might end up that you wait quite a while, the 3 months or even 6 months, and it ends up where the transaction doesn't go through. So you end up having to start all over from scratch. So just understand that with a short sale, that's possible. It's possible with any real estate transaction, but more so with short sales because of the nature of the beast. Okay, right now I think I have one more question, and we're about 25 minutes in, so that'll be good. Let me just pull it up here. Is it better to buy a house or a duplex that I can rent part of it out? Okay. What you want to consider with that is, what are your long-term goals and near future short-term goals? If you're just a single person or a young married couple or something like that, or even old married couple, it doesn't matter, and you want to have that extra income there, then that can be a great thing to have. If you have young kids, it might be something to consider, that you have your tenants live right next door, which means that they can, unless you set up good boundaries, they can come over in the middle of the night because a light bulb is burned out, and they think that you're supposed to repair that, and they can't they can't sleep without a certain light on in the house or something like that. That may be far-fetched, but it's possible. Always something to think about. So if you're in a situation where you're okay with being right next door to your tenants, and you're familiar with property management or something like that, then I say yes, go for it, because it's possible that the rent for that other half of the duplex could pay for your mortgage. and you'd be living rent-free and maybe even making some money that way, but there may be some heartache and some inconvenience that has to go along with that, which is true with any rental property. So I would say overall, if you're gonna be a landlord, make sure you're ready to do that and you understand what can happen, you know, what horror stories there may be, and read the good and the bad, do some research on that. And I'll add to that, a single family home will be much easier to resell when you're thinking about part of your long-term future. A single family home will be much easier to resell than a duplex. You have a lot more people in the market for a single family home than you do for duplexes. So if you're only looking to do this for 5 years or something like that, and you're not going to hold on to the duplex for a longer period of time, then you may just want to go with a single family home. So that way you're able to unload it in the future. Okay. Okay, we have one more that came in. When should I start looking at homes to buy if I'm selling my current home? Definitely keep an eye. If you're preparing your home to sell, it's not yet on the market, definitely keep an eye out on the market to see what's happening with the homes that are in your price range that you like. You want to know how quickly are they leaving the market, and that's something that your agent can tell you. Because you want to know if you put your house on the market, if it gets a contract the first day, you want to be able to get a contract on a house within the week, if not sooner, basing it contingent on the sale of your house if you need that as far as your lender is concerned, or even if you are able to pay 2 mortgages in case the other sale doesn't happen. You may not want to do that, so keep that in mind. So be aware of the market, which you should all be aware of the market if you're selling your home, if your agent has told you about that. But if you're moving up or something like that, say your house is $150,000 that you're selling and you're moving up to a $250,000, that's a different market. The houses tend to take a little bit longer to sell there, but it just depends. So know the market and be prepared for that timeline. But certainly have your house on the market first if you need to sell your house before buying another house, before you go out and look at homes, because of the way the market is right now. The houses that you look at now may not be on the market next week or next month. So make sure your house is ready and it's on the market and ready to go before you go out and start looking at homes. Otherwise, you'll be wasting your time looking at houses that won't even be available, most likely, when you get to that point. Okay? Well, we're at 30-minute mark, and I think that I've covered all the questions there. I haven't had any come in on email, so we're looking good there. I hope that this was helpful information for all of you, and in the future, if you have other questions, you can submit them early at JRCoxRealtor@gmail.com. You can also send them in on Facebook. It's facebook.com/JRCoxRealtor, or you can just look up JRCoxRealtor on Facebook and you'll see my face and you'll know that that's me. Also, I'm on Google+, YouTube, Twitter, Pinterest, Periscope, Instagram. You can send me messages on all of those and I'll get them. I'm not as active on some as I am on others, but I'll get it and I'll be able to answer that question for you. So again, thank you. And if you have any questions in the meantime, email me at that JRCoxRealtor@gmail.com, or call me or text me at 352-409-4741, and enjoy your evening.